Our market guest R. Shankar from Prabhudas Leeladhar. Shankar, hi, good morning. First, a word on PSU banks and banking space in general, the leadership sector. It's corrected about 8 to 10%. Do you think it's good time to go back and buy? Or would you say the kind of earnings disappointment we have seen and the kind of rally we have seen, there's still some room for more correction?
When you speak about the earnings disappointment, let's be very clear about two things. More than the profit after tax numbers, we need to continue to look at the pre-provisioning operating profit growth of these banks. I'm very certain that a lot of banks have consciously slowed down their credit growth, basically because they are not seeing the kind of improvement in the outlook that they are expecting to see. What we need to realize is if there is a problem in the economy, that will be reflected in the banking sector. Especially infrastructure is one area where you have seen a lot of problems. The problems are due to cost overruns, delays, etc., etc. And that will be reflected in these bad numbers of PSU banks because they have lent to these infrastructure numbers. So unless you see the domestic economic recovery, I don't think that PSU banks will see a large improvement in the asset quality per se. So that problem will continue till the time you see an improvement in the domestic economy. That's number one. Number two, if we expect domestic economy to improve, where should I be? My obvious choice will be in the banks. And if you see that the private sector banks have already outperformed, they have far outgrown the way public sector banks have done. So I would definitely look into the current fall in these banks to look for a longer term investment. I would definitely look if my expectation is that there is going to be a domestic recovery and your economic growth is going to be there.
Okay, fair enough. Sri Shankar, but would that apply to, even private banks? For example, the recent correction that we've seen in Axis in the past 2 to 3 days, or maybe for ICICI Bank, the decline that we've seen post its numbers, would that be an opportunity as opposed to PSU banks that you spoke about?
Let's even look at it. Why do we need to look at even stop it at ICICI Bank or Axis? Let's even extend it to HDFC, Yes Bank and IndusInd Bank for that matter, the entire Kotak Bank, etc., everybody. The problems with the public sector banks has been to the benefit of private sector banks in terms of an asset quality. It has not happened the way what has happened to the public sector bank. So you have seen a huge variation in the valuation of the market is giving for these two banks. So obviously all the private sector banks have actually outperformed very well, and you will continue to see this outperformance. And let's not forget it. You're actually reaching a level wherein where people start to believe that nothing can go wrong in private sector banks and the valuations further get stretched, then it's going to be a question mark.
Okay, the other space that's under pressure of late, Sri Shankar, is the auto space. Especially stocks like Mahindra and Mahindra and even Maruti from its highs. How would you play this particular space?
I think these stocks have actually, Maruti has doubled. So effectively, if you look at the last 1 year plus, etc., the kind of an outperformance these stocks have had is quite huge. And we continue to believe that again, the benefit of a domestic growth story will happen out here. So you were mentioning earlier in the NDA program, how you have seen the IT outperforming recently over the last probably 2 weeks, and while the PSU banks have underperformed. No, the banking space have underperformed. I think you will continue to see these kind of sectoral outperformance, underperformance in the near term going forward. If my call is, if you see that entire economy continue to do well, or we expect to start to see the benefits of it, obviously you need to get invested in the automobile space as well.
Okay. What would your opinion be on maybe the likes of ONGC as well as GAIL, a couple of these upstream companies?
Right now we don't have a coverage on it, so I'll desist from making a comment on it.
Okay. All right. That's on the oil and gas space. But would you have a view on the IT space?
Yes, we do have a view on the IT space, and we continue to believe that the IT demand environment in the US still continue to remain robust. So we view that one should not go underweight on IT. We have an overweight on IT, a neutral weight on IT, and at the same time we continue to like that space. We still have in our topics In the large cap space, we have Infosys, we have Tech Mahindra. Then in the mid cap space, we have Hexaware and KPIT Technologies, etc. We continue to like that.
Okay, Sri Shankar, we've seen quite a bit of rally in high beta space over the last 1 month or so, ever since that rate cut from the governor, the surprise rate cut that had happened. Do you think these stocks in the infrastructure real estate basket are still good for more, or if you had some profits here, you would recommend booking them?
See, let me not just link that infrastructure space to the rate cut announced and the kind of a rally or whichever way the inflows has happened. We need to take a more pragmatic view of what is happening in the infrastructure space per se. The fact remains that most of these loans are for 15 years, etc. The current cash flows from the traffic that you see is probably not enough to see the repayment or take care of the repayments in the initial years. That's why a lot of these projects have become stressed. On top of it, these projects are delayed for want of the land being given on proper time, etc. So there is a cost overrun, there is a time overrun, and further cash flows are getting, there is a misflow of cash flow. Now, if you look at these infrastructure projects, technically, unless there is an excess supply, the cash flows has to be there. Only these infrastructure projects, there is no excess supply. So it can't be an NPA at any point of time. Only issue is your cash flows are getting a bit delayed, a back-ended rather. So what I would think is that it needs a restructuring. Probably in a lot of these cases, the repayments in the initial years needs to be slightly on the lower side, and as your toll rates actually starts increasing along with inflation plus the traffic growth, your cash flows over the next towards the later part of the period is much on the higher side. So that way, a lot of these infrastructure projects, once it is properly restructured, will be back into performing assets and will do extremely well. So I would rather look at these infrastructure projects from a longer term view, and probably I can't take a blind call. I need to go and look at each and every one of these infrastructure projects, in what state they are, and then start investing.
Okay, fair enough. Point taken, Sri Shankar. Any disclosures?
Yeah, I did send the disclosures, and the stocks are discussed. I don't have a holding.
All right, fair enough, Sri Shankar. We leave it on that note. Thanks very much for joining in, talking to us. So that's some fundamental perspective coming in. Take a break, but we'll get talking to our first.